This is Seewing, and today I'm going to talk about a report by CoreLogic dated March 2023. So a lot of great updated, urgent, important information. Before I share the screen, please, at the end of this short video, if you see value of this video, please smash the like button and subscribe to my YouTube channel. Thank you so much. And without further ado, let's proceed. Again, CoreLogic headline dated May the 2nd, 2023. CoreLogic, the headline is March US annual home price growth dips to lowest rate in more than a decade. Now, you need to dive deep. Of course, I'm going to help you dive deep into this headline. Dips to lowest rate in more than a decade. Not much of a dip, just a very moving the needle, just a little bit. There's no gloom and doom scenario. Just don't get freaked out. So I'm here to help you to be better informed, better educated, and not succumb yourself to clickbait YouTube videos and national news headline because they all have this motivation to clickbait you and entice you to subscribe to their channel so they could monetize their money. I'm not saying that's bad. Is everybody's a capitalist, myself included. I don't find myself doing clickbaits. Maybe that's why my subscriber lists are pretty minimal compared to this crash bro videos out there. Housing crash videos, they always get the clickbait because people want excitement. People want this illusion that something weird and exciting is happening. That's human nature. I get it. But my objective is not only to grow my channel, and I need your help, of course. That's why I produce this generic housing market updates, and I produce real estate investing information as well. Yeah. So anyway, I I have to be moral and ethical in my education. I'm not here to give you my story, but to provide you some very good contents and give you my personal opinions about it. Because I've been a real estate investor for more than 30 years and I have guided hundreds, if not thousands, of real estate investors to buy cash flow turnkey rental properties in low cost markets. That is my business model. Getting back to this article by CoreLogic. Again, this is a lagging indicator. This information is like a few months back. That's how it is. It takes a while for any kind of news information to come. When it come aboard, they always are a couple of months behind. By the time you hear this presentation, then next time I come back to a CoreLogic update in the next couple of months, you will see some drastic changes in the housing market. So anyway, just prepare for the ride. Okay, let's begin. U.S. home prices growth fell to 3.1% in March. Fell to 3.1. Still a positive number, for God's sake. The lowest rate of appreciation since 2012. So while home prices rose for 134 straight months. So real estate market has been robust for the past decade. For those of you that purchase a primary home, for those of you purchase rental properties, you have experienced consistent price equity appreciation. So good for you. But in 2022, we have seen a little bit of correction. So some markets have decreased in home prices, at least temporarily. But many markets, surprisingly, has been steadily increasing home prices amid this volatile housing market. All right, so let's continue. By the way, today's rate, as we speak right now, what's today's date? Today's Saturday, 6th of May. According to a Mortgage News Daily, I think the mortgage interest rate is for 30-year fixed rate mortgage is, I think, around 6.49% for those individuals who have good credit. Mortgage rate has been pretty steady in the past few weeks, around the mid sixes, and we're seeing continuously pent-up demand and historic low supply of inventory. This is the narrative that you need to understand what's going on. All right, let's continue with the CoreLogic information. CoreLogic projects that U.S. annual home price growth will continue to decline over the spring and early summer before picking back up in later 2023, while housing markets across the country continue to send mixed signals. Prices in many large metros appear to have turned the corner. That means? That means home prices are rising in the past few months of this year, 2023, with the U.S. recording a second month of consecutive monthly gains as of February, said Selma, chief economist at CoreLogic. At 1.6%, month over month increase was twice the average seen between 2015 and 2020. The monthly rebound in home prices underscores the lack of inventory in this housing cycle, she says. And the top takeaways from this CoreLogic article is that such that the U.S. home prices, including distressed sales, increased by 3.1% year over year in March 2023 compared to March 2022. So we've seen some very good uptrends. CoreLogic forecasts show annual U.S. home price gains moving to 4.6% by March of 2024. Wow. It appears that CoreLogic has updated the housing forecast. The previous housing forecast they did a few months ago, it showed lesser gain. So 2024, CoreLogic projected that the housing gains will be 4.6%. Now, this is pretty significant in my opinion. Several news media, in addition to CoreLogic, has been recently, the past few months, has revised their housing market forecast for this year, 2023, and next year, 2024. That's you had a lot of good positive signs amid some very challenging times in the economy and the housing market. In terms of a specific local markets, Miami, and for the most part, throughout Florida, and many of our investors have purchased investment properties, cash flow properties in throughout various locations in Florida, and they have done very well with cash flow, even with 25% down payment, even with the higher mortgage rate. So good for you, my investors who are doing very well by in both the long term and very robust markets where home prices are still relatively low compared to different parts of the country. So Miami has posted the highest year-over-year home prices in the country of the 20 track metros. Not just Miami, a few other areas of Florida have done. Southwest Florida, Central Florida, and a few other pockets of Florida have done very well. But Miami is super expensive. I mean, a lot of their homes are multi-billion dollar homes, so they are going crazy. What have you. Anyway, the next CoreLogic HPI press release, which is Home Price Index press release, featuring April 23 data, will be issued on June 6, 2023 at 8 a.m. So I will put it on my calendar. On June the 6th, you will get a video update on what CoreLogic has to say on June the 6th. Remind me, I'll put it off my calendar. June the 6th, 1944. Anyway, on this chart right here, the HPI index and HPI forecast percentage has changed year over year. As you can see, over the past 18 years or so, the HPI was very down during the housing crash back in 2008. But post housing crash 2008, the HPI has increased substantially the following few years. It took a slight dip in 2012. Then from 2012 to all the way to 2017, it has gone up and then level off between 2010 and 2020 for the next 10 years. And then during the pandemic real estate boom of 2020, 2021, and a part of 2022, the HPI increased dramatically. The housing boom has made a lot of people rich over the past 3 years. And then, of course, one with sudden skyrocketing of interest rate occur the middle of last year, 2022, where the mortgage rate went up to 7.3% around October 2022. And then when you see some big drop in demand of homes, that's pretty obvious. And as a result, the HPI has decreased accordingly. But since the beginning of the year, I bet you right now, the bottom has hit. The bottom of the housing market, in my opinion, was the beginning of this year because of the pent-up demand, even with a mortgage rate around 6.5% as we speak. But the historic trending lowering of the supply inventory has causing the home prices to go up month over month in the past few months to see the upward trend right here. As a result, CoreLogic increased their forecast for 2024 to the tune of 4.6% home price increase. So there's a very good sign coming from CoreLogic. All right, single family home combined with HBR percentage change. It indicates what happened on certain markets. CoreLogic have these three categories: normal, market condition, normal, overvalue, what have you. So let's go over certain specific market that CoreLogic has determined as normal or overvalue, and they are: Boston is normal, the Midwest Chicago region area or normal, and however, Denver area is overvalue based on their HPI percentage indicator index. Houston, overvalue. LA, Southern California, normal. Miami, South Florida, overvalue. Phoenix and surrounding metro area is overvalue. San Diego, overvalue. And Washington, D.C. area, the Northeast is normal. However, they derive at this figure require deep dive, but I don't know. It's just their subjective evaluation of how they define normal or overvalue. I may not agree with some of those assessments, but that's just my personal opinion. So let's conclude with the table two here. Top markets at risk of home price declines, but this number does not mean exact price declines. It just shows their confidence score. However you define confidence score require more of a deep dive that are beyond the time limitation from this video. So all I can say is I can say what I can say based on my general understanding of this particular graph, which is not much to be honest. So top markets at risk of home price decline are: number one, Provo, Utah, very high and 70% probability of a price decline. And Boise, yeah, I can understand. Boise is a boom and bust town, pandemic boom bust town. It skyrocketed amazingly back in 2021. But what goes up must come down. So I clearly understand Boise is a high risk of price decline as we speak. And Lakeland, Winter Haven is for the Central Florida market, has a very high probability of decline. I find that quite surprising because Central Florida, which many of our investors have purchased rental homes, cash flow rental homes over the years, has been consistently rising for a number of years already. To see this specific region of Central Florida, Lakeland, Winter Haven, to have a risk of a home decline, I personally have to do a deep dive because I may not necessarily agree with this assessment with core logic. So Lake City, Utah, yes, is a very high degree of decline. Finally, Ogden, Utah. Why? Core logic is picking on Utah at number one, Provo, Warren, and Utah. Salt Lake City at number four, and then Ogden, Utah. I don't know, man. If you are listening on this video, if you're from Utah, please share with me whether you agree with the assessment. Tell me what's going on in your specific market because I'm not sure I agree with it. But who knows, right? Real estate is hyper local, right? There's no such thing as a national real estate market. So I would welcome your comment wherever you're listening on this video. Please comment below what's going on with your specific market, because every local market is extremely different than other. There are 400 MSA, 400 metropolitan statistical areas, MSA metros in the US. Is huge. I take this national real estate market statistics with a grain of salt, because we just can't paint a broad picture without all the data, all the markets will uh, move the same direction. It just doesn't happen. Everything's local, hyper local, as a matter of fact, the real estate markets. Okay. So the takeaway for me is from this article by CoreLogic is such that there's a lot of positive signs of things are turning around based on the data. We have seen very low inventory of homes, still come down to almost historic low at mid 2 months of inventory, which is extremely low because people are not selling. Sellers are locking in the mortgage rates, and they have very little motivation to sell because they're knocking at 3% or lower rate, and they could move up to buy a new home for 6.5% and double their mortgage payment. That's ridiculous. So they can sit pat unless the mortgage rate comes down below 6%. Maybe some of them may sell, thereby potentially increasing the supply of the inventory. Time will tell. We don't know. I do not have a crystal ball. Suffice to say, right now, is CoreLogic, among other social media platforms, are providing some very good positive updates about not only this year and the next year as well in terms of housing market forecast. So there's a lot of activities going on, pent-up demand, low supply, economics 101. That's all you need to know. If demand exceeds supply, which is happening right now, and it will put pressures on price increases. So at the end of the day, if you can afford to buy a primary home, if you're ready, if you like the area that you want to live in, and you want to stay in your home for the long term, 7 to 10 years, you could overcome this short term market volatility, if you will. So if you're real estate investors, there's never a wrong time to invest in real estate, to buy cash flow turnkey homes. I am buying consistently regardless of the economic conditions, because I buy for cash flow with 25% down payment. I invest for the long term and let my renter pay my debt service for myself, and I achieve positive cash flow for many years to come. Stay the course. So that's my philosophy. Before I let you go, please, if you see a lot of value in this presentation, please smash the like button and subscribe to my YouTube channel. And also, the last thing I'm going to ask you to do is quickly visit my website below and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. Once you join the network, you'll receive weekly market updates, investment opportunities, real estate education, and interviews with top industry leaders straight to your inbox that you just won't find anywhere else. Our goal with our investment club is helping investors invest out of stake, which is our specialty. We connect you with the experienced real estate agents and experts in the hottest markets throughout the country, regardless of where you live, helping you invest in profitable, cash flowing properties is what we do best. Thank you for watching, and I'll see you on the next video. This is Seewing. Have a nice day. Bye bye.